You were listening to chartingwealth.com for Thursday, the 24th of August, 2017. We see stocks are down for the day, but the S&P 500 down 0.36%. We see the Qs, that's the NASDAQ 100, down the same 0.36%. We see the 20-year bond fund up 0.68% and gold up 0.38%. In other words, things are following the path that we see on the weekly vertical crossovers. Had an up day, the exact opposite, over the course of the prior day. Remember, a couple of things going on. This is the summer doldrums. We are not yet into the fall-winter trading zone. What does that mean? Things are sort of haphazard. They don't flow as smoothly and as long a movements as we typically see in the fall-winter trading zone. That's why that adage, sell in May and go away, live to trade another day, is an adage in the market, because that is a truism. When you have a lot of the volume go out of the market, crazier things can happen. It's like it's much easier to splash water out of a bathtub than it is the ocean when it comes to rocking it back and forth. That's the same analogy to think about when you have less volume in the market. Smaller things can make bigger ripples, particularly in price movement. So remember also, all things being equal, the market tends to move in the direction of the biggest chart. And on the S&P 500, that's the weekly chart. It is laminated. The blue line's actually over the gold signal line, the vertical crossover going down line. It's there, trust me. Trying to reveal it, but it is not popping up. But it is right there. We had the weekly vertical crossover. We have the gold arrow and the two-day vertical crossover. Both happened last Friday, the 11th of August. So actually last Friday, 2 Fridays ago. We're coming up very soon on the 24th, which of course, I'm sorry, the 25th, which will, of course, be the third week in this down movement. Now, we do have 3 candles. We don't have the latest candles not fully formed. It will be at the close of the day on Friday, but we have weekly vertical crossover going down, 2-day crossover going down, where our price movement's well below both the weekly and the 2-day trend lines. We look at this 2-day chart. We see that we have a doji that has been formed, a green doji, which of course means that we've got indecision there over the course of the last 2 days. We do continue to see, though, derivative oscillator continues to heat up going down, and the price percent oscillator not going down at the same strong movement it was, but still going down. And again, as we plug into the 4-hour chart, what do we see? Well, we see the 4-hour chart actually crossed back over, going up in the morning. And this is, again, the MACD. We see price movement now, again, down 0.36% for the day. It had popped up a lot in the afternoon on Tuesday, the 22nd, and then started off lower and didn't gain as high as it was, so it was a technical loss for the day. We are concerned with the 4-hour chart crossing over. However, as we talked about on yesterday's program, we don't have a violation yet of the 2-day trend line. So those of you who've been watching that, who are in the down trade, continue to watch that. If the market opens and blows through on Thursday, the 2-day trend line, that might be a warning to you. Some folks may have just gone ahead and pulled the plug at the crossover at the time that it did cross over, pulled the plug in the afternoon at the opening somewhere around 144.51, waiting for a crossover back going down. So there's no right or wrong way to do that. Definitely if you'd had a crossover on the 2-day chart, that is going in the opposite direction of the weekly and the 2-day candle, that would be an up movement. Then of course you would have seriously looked at pulling the plug. Whenever the weekly trend line's violated, you also seriously look at pulling the plug. But when you have a 4-hour crossover and a crossover of a penetration of the 2-day trend line, those are pretty good reasons for you to get out and live to trade another day. Maybe take a minor loss and then wait for a rotation back over on that 4-hour chart or even the 2-hour chart and jump back in. Now let's keep moving through. We can move a little faster. I know we always spend more time on the S&P 500 because it's sort of our warm-up. Same lessons that we talk about on the S&P apply to the other charts when it comes to the teaching aspect of things, but I spend a little more time on the S&P just to get us warmed up. What do we see going on? Oh, I didn't mean to go to gold, meant to go to the Qs. QQQ. It's also in a confirmed down move all the way back on the weekly vertical crossover on the 16th of July. Down for a few weeks, up for a few weeks. Now it's in another down move. Of course, the 2-day vertical crossover occurred back on the 11th of August, and it has been going down since then. Again, down for the day, 0.36%. We look at the 2-day trend line. Of course, like we said, that was on 2 Fridays ago. Crossover going down, continued to move down, was down for the day. We have a bit of a green spinning top still. Derivative oscillators moving down, price percent oscillator, we're below the 2-day trend line and the weekly trend line. As we look at that 4-hour chart, what do we see? It too crossed over in the morning. Did not have enough to penetrate the weekly and the 2-day, but it's darn close on both of them. So be very careful if you're still in a Qs trade. Check that thing around 10:30 in the morning and just see what you see. Be careful. Look to get out after that first 4-hour candle is drawn on Thursday if it doesn't look good. Now again, we did end the day down, so just keep that in mind, which is where we wanted things to be. Okay, next, TLT. Again, weekly vertical crossover going up, 2-day vertical crossover going up, 3 weeks of up movement, derivative oscillators continuing to heat up, and we see a nice steady climb in the price percent oscillator. Makes us feel good about things. What's going on in the 2-day? 2 days continuing to arc up nicely. Movement well above the 2-day and the weekly trend line. And of course, as we look at that 4-hour chart, getting close. Did not penetrate and crossover going down. Bounced. Well, didn't quite bounce off the red line. Started moving up again. Continues to look very nice. Still a green positive on the price percent oscillator, and like we said, the derivative oscillator, price percent oscillator, is still moving up, so we feel good about TLT. And also that portends that stocks may very well continue to move up. Why? Because bonds are inversely related to stocks. They're a safe haven where people go when the stock market's not doing good. So if bonds are continuing to move up, makes you think that stocks will probably continue to move down. That's where the smart money might be going. Okay, and again, we're trend followers. Want to find trends and follow them. Lastly, folks, we're going to go back to our weekly chart. Look at gold, up 0.38%. We have, what is that going on? 7 up candles in gold, continuing to hike upward, which is quite nice. Movement is above the 2-day and the weekly trend line. As we zoom into that 2-day chart, what do we see? We continue to see nice price movement. We do see derivative oscillator losing some energy. Price percent oscillator not quite at steep an angle as it had been before. Continue to keep an eye on things with that red spinning top at the end of the day. But the nice thing is the 2-day chart is continuing to move up strongly. Now, what's going on that 4-hour chart? Yep. It crossed over going down in the afternoon on Tuesday. Did have 2 up candles at noon and at 4 on Wednesday, but do be concerned that it has crossed over in derivative oscillators -2. Again, all things being equal, when this comes to this gold chart, this 4-hour chart had been up until the last several days really controlling things. So be alarmed and keep a close watch on gold if you're in an up trade at this point, because that 4-hour chart has crossed over going down. Folks, that's where we are at the end of the day on Wednesday the 23rd as we go into Thursday the 24th. We appreciate you being with us. If you have questions, problems, concerns, you can always write a cw@chartingwealth.com. Check out all the great training at the website. If you've not signed up for and aren't receiving our daily market review, it is a newsletter that has incredible information in it. I'll go over that in just one second. Plus, our daily video that we put out for you, where we cover these 4 very important exchange-traded funds. The lessons you learn from following us every day can be used not only on the 4 funds we follow, but on stocks, on other ETFs, on whatever you want to track. But again, we teach you lessons that can be applied across the board. Now, when you sign up for our newsletter for free at the website, chartingwealth.com, put in your first name, your email address, you get our daily market review video, plus you get links to our How to Read a Stock Chart video. Very important to understand what we do, why we do it, how we do it. About 15 minutes of hardcore learning, what you need to get started. You also get the layout that we use at freestockcharts.com, that video layout you see every day for the video subscribers, and we appreciate everybody who listens on audio on iTunes, and we try to explain everything that we do. We also provide you with, besides the How to Read a Stock Chart video, the layout at freestockcharts.com, operative word there is free. We also provide you with our daily market worksheet, our weekly market worksheet, and our trade worksheet. If you want to supercharge your training and really start learning what it is we do, how to be a charting master, learning how to follow trends, you need to fill out those forms. The trade worksheet every time you do a practice trade. Again, we're not a stock calling service, we're an education firm. And you need to fill out every day, Tuesday through Friday, the daily market worksheet. Take you 10 minutes as you listen to the program, fill that out. And then, of course, over the weekend, fill out the weekly market worksheet for Monday. God bless you, my friends. Let us hear from you again. chartingwealth.com. Please follow us on Facebook, Twitter, Instagram, and particularly YouTube. God bless. All the best from the whole team here at chartingwealth.com.